Bitcoin, the largest driver of Bitcoin in the cycle. So if you think about that technology, that gives it this exponential uptrend. So if you put a logarithmic chart, it's actually pretty smooth. What are the cycles driven by? It's driven by liquidity. The biggest driver of Bitcoin is global liquidity, not just the Fed liquidity. So if you use the global bank balance sheets year on year, what you find is that's the thing. So China's already starting to print. The UK is starting to change. I think Europe will be pretty soon. So I think that all we need is a turn. The rate of change needs to turn and crypto turns, which is why, ETH bottomed in June. It's been looking forwards saying the cycle's turning. And I think it's right. So I think the cycle's turning and it takes a while to play out. So people would call this crypto spring. Spring is a time where, it rains a lot, it's cloudy a bit, sunny a bit, it's cold, it's warm. And that's exactly what the crypto market's like right now. It's just messy. But it's not really going down either. So it doesn't get colder every day. That's winter. So I think we're in crypto spring. And as liquidity changes, and I think that happens relatively soon because things are getting pretty ugly out there.
Hello and welcome to Money Talks. In today's video, Real Vision CEO Raul Paul updates about his views on cryptocurrency market, including Bitcoin, the correlation of crypto with inflation, and his take on dollar dominance. Raul also briefs about the concept of inflation versus deflation and the major factors that drive the price of Bitcoin. Make sure to stick around till the end of this video where Raul Paul reveals why the adoption of crypto is inevitable.
I've done the maths here badly, because I'm not a statistician. In fact, I failed all my stats classes. But if I look at the gold above ground supply and the known reserves and apply that to Bitcoin, so it's called a stock to flow. I said, I think Bitcoin's worth $1 million with gold at 1,300 at the time. I then also said, and I'm also an idiot, so I'll discount myself by 90%. So let's assume 100 grand is fair value. And it was $200. So I'm like, this is the best reward any of us are ever going to see in our entire careers. And everyone got it. But that's my global macro investor audience. These are sophisticated investors. So cut to the first video on Real Vision when we mentioned Bitcoin. And it's like, it's a scam. It's ridiculous. You need to own gold. Remember, gold was at $1,300 back in 2012. And where is gold today? Just double checking. Gold today is $1,600. Bitcoin was at 200, and now Bitcoin today is at 20,000. But, oh God, on Real Vision, we got such pushback. This is ridiculous. How dare you?
Major cryptocurrencies were trading slightly higher early on October 23rd, with the global crypto market cap at $923 billion, up more than 0.5% from the previous day. In the last 24 hours, the total cryptocurrency market volume was $32 billion, a 39% increase. The leading cryptocurrency, Bitcoin, is consolidating near $19,216, having gained less than 1% during the Asian session. BTC has formed a symmetrical triangle pattern, and a breakout of this triangle will determine the price action moving forward.
So when you look at gold in rupee terms, it's gone up. What has the rupee done over the last 20 years? Gone down. Why? Because of inflation and central bank policy and those kind of things. Indians buy gold because it maintains their purchasing power over time. And it's worked astonishingly well. It's the same with crypto. What you're hedging here is not inflation, i.e. prices rising, which is usually demand or supply driven. What you're hedging is the debasement of currency, where your purchasing power goes down. So, okay, let's go back one step. What is Bitcoin? Bitcoin is a scarce digital asset, and we either choose to accept it or not, right? Like everything, like gold it's just a metal. But the meme says we should accept it as something of value. So Bitcoin is a meme that is the digital store of value. But it is also a technology. So if we think of Ethereum now and the rest of the crypto space, this is a new tech of which we can use blockchain for a whole bunch of different things. So what we've got is this scarce asset and technology. Okay, great. That's worth something. The other side of the equation is, as you mentioned before, these however many white dudes, aging white dudes in the United States, set the monetary policy for the world, essentially. That liquidity washes in and out of markets. So when it washes out of markets, as it is right now, they're raising interest rates and they're reducing the balance sheet. That's taking money out of the system. So it's a game of musical chairs. So what happens is people are scrambling for dollars, and both, you see currencies falling around the world, but also people can afford less assets because there's less leverage, less money around. So the price of Bitcoin, NASDAQ, everything falls. I mean, literally everything, house prices. And the dollar goes up because there's less dollars around.
That's what's happening right now.
That's happening right now. So if we go back to 2020, what happened was massive liquidity coming in, plus debasement of currencies, quantitative easing. Right now, we've got the opposite of debasing of currencies. We've got quantitative tightening. So the currency is actually getting stronger. So the assets should go down versus that. But back then, we had like a 50% increase in the Fed balance sheet. We've never seen that much monetary expansion in the modern history of the United States. And so what happens is you then look at all of the assets, and what did best out of that was Bitcoin, or all of crypto. Why? Because not only, so gold did okay and equities did well, but Bitcoin did really well because you had both the technology bet and the monetary bet. And so it outperformed. So if we're in an age when the central banks are straddled, the global economies are straddled with debt, and this doesn't apply to India as much as it applies to the Western developed nations, is their only answer is to print money to avoid catastrophe, because who pays the debt? So the central banks backstop it.
Analytics account On-Chain College, meanwhile, noted that even such an hourly uptick had managed to spark a comparatively large number of liquidations, setting a multi-day record. Around $6 million in Bitcoin short liquidations over the last hour. This is the highest short liquidation level in 10 days. It confirmed alongside data from on-chain analytics platform CryptoQuant.
The US is 25% of world GDP. It is 87%, the US dollar is 87% of every trade transaction in the world. And it's also the most indebted nation in the history of the world. It's 100% of world GDP in debt. But not only that, everybody else is in debt in dollars. So when things get scary, you go to the safest asset, which is the dollar. But there's always a scarcity of dollars because the US is only 25%. So it can't ever generate enough dollars for the system until it massively prints dollars and then gives them out to people. So the dollar is always in short supply globally. And in recessions, it's in extreme short supply. So right now, because the Fed are taking dollars out of the system, the dollar is going up a lot. So over time, this dollar shortage just keeps playing out. Everybody uses the dollars because they have to, because 87% of trade is in dollars. So you've kind of got a gun to your head. You need to use dollars.
As reported by cryptocurrency analytics source Kaiko, Bitcoin's volatility has decreased below that of the S&P 500 and NASDAQ. Cryptocurrency markets, the business argued, have grown less sensitive to risky macro events, including high inflation, an appreciating dollar, rising interest rates, prolonged war, and the energy crisis.
Two schools of thought. The current strongest narrative, which is not the view I share, is that in a world that is deglobalizing, like we're taking Russia out of the world, we're trying to remove China out of the world, there's not enough, and also a world that's moving towards moving away from fossil fuels. We don't have enough investment in mining fossil fuels, that kind of stuff, and therefore any demand in the upcycle means that prices rise and we get inflation. Also, the fact that people like the US or the Europeans have to build factories in their own countries, i.e. onshoring, means that wages rise in those countries. And therefore, people are suggesting that prices are going to be stickier for longer. So they're saying The big narrative is, well, inflation's probably going to be about 4%, and therefore interest rates about 4% for another 5, 6, whatever years. And we've gone to a new regime. My argument is the regime looks confusing because we had the pandemic, we shut down the world, we reopened the world, there wasn't enough supply, so prices rose massively. And we're seeing the recession that has caused. Interest rates went up, prices went up, everyone's like, oh my God, I've got no money. And the downside of that, I believe, is deflation. And I think deflation is a structurally larger force. Why? Because in the Western world, the population is aging. It's completely the opposite of India. So India average age is 28, the United States is 58, and Europe is older. So we have a record number of retirees. Now, if you've ever seen your parents retire, one thing they end up doing is not spend as much money. Why is that? It's just human psychology. You don't know how long you're going to live for, and you've got a fixed amount of money left. So the first thing you say is, oh shit, I need to stop spending because I don't want to be 85 and homeless. Right? So it's a really strong thing. So spending collapses, and so the economy tends to be deflationary.
So, do you agree with Raoul Paul that crypto spring has started? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.